Hello, I'm Susanna Streeter. Welcome to Finance 3.0, brought to you by Project Syndicate. The future of finance, or just a fad? There's no question that the cryptocurrency blockchain revolution has, in the space of just a few years, created fortunes, devoted followers, no shortage of haters, and an army of the slightly confused. But what does the future hold? When and how will governments intervene? And with huge uncertainty over global supply chains, the spectre of inflation, and the impact of the war in Ukraine, to name but a few, is the crypto economy in for tougher years ahead? Coming up in the next 2 hours, we'll be running through those questions and more with Jeremy Allaire, co-founder of Circle, the company behind USD Coin, Carmen Reinhardt, the chief economist of the World Bank. Raghuram Rajan is former governor of the Reserve Bank of India. Barry Eichengreen, professor of economics at the University of California, Berkeley. Hester Peirce is a commissioner of the US Securities and Exchange Commission. Kate Pentus-Rozimanis, finance minister of Estonia. And Alex Borniakov, deputy minister of digital transformation of Ukraine. Now, unless you're waking up from a week-long digital detox, you'll have heard the news that the world's most famous crypto supporter, Elon Musk, has bought a 9% stake in Twitter. So why not join him online and help share the word about today using the hashtag #PSEvents. And if social media seems a bit Web 2.0 to you, fear not. On your screen now is a QR code that will link you to a POAP NFT, which you can get for free and prove your attendance here today. And if you're registered to this event, you'll also get an email with a link to claim your NFT. Who knows, one day it might be like having an early mint from the Bored Ape Yacht Club. And thanks in advance for not sharing the QR code, because it's for live streaming attendees only. Now for our first session today, New Money. We'll be looking at the role of regulation. With governments around the world struggling to get to grips with the crypto revolution, what are they going to do? Is the crypto space, as some allege, really like the Wild West?
Okay, let's jump into the news everyone's talking about. That executive order. President Biden's directive calls for agencies like the Treasury Department and the Federal Reserve to ramp up research into regulating crypto in the U.S.
Some real food for thought there. Well, now I'm delighted to be able to introduce our absolutely splendid panel for this session. Hester Peirce, Commissioner of the US Securities and Exchange Commission. Welcome to you, Hester. Also, we have Kate.
It's lovely to be here.
Fantastic. Also, we have Kate Pentus-Rozimanis, Finance Minister of Estonia. Really great to have you here as well.
Thank you. Great to be here.
Douglas Landy, co-head of the Financial Institutions Industry Group at White and Case. Hello there, Doug.
Thank you. Good morning from New York.
Good morning. And Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle. Welcome, Dante.
Thank you. Great to be here.
Great to have you all here. But first, who better to kick us off than Raghuram Rajan, former governor of the Reserve Bank of India.
Where do we stand on the whole issue of cryptocurrency and regulation? Regulators are trying to understand what exactly is going on. It's grown much larger than they would be comfortable with without regulation. They are an investment vehicle for a lot of people. And any investment vehicle requires a certain amount of regulation just to make sure these aren't fly-by-night operators who take your money and run. And especially in an area where, we have 6,000 plus cryptocurrencies, we have a lot of people who have issued versions of the same kind of digital asset. Who knows whether they're legitimate or not? And so that requires a certain amount of regulation, at least registering to make sure that you're on the up and up rather than a fly-by-night operator. When you're pretending to be something which causes risks to the system. So an example of that is a stablecoin, which basically says, I'm going to take your money whenever you want to redeem your token or your crypto, you will get that money back. It's the same kind of promise a bank makes with your deposits. And in order for that to work, you have to be fairly confident that the money is there, or the bank can access that money if need be to pay you back, especially when everybody comes for their money. So a stablecoin has what is called run risk. One reason that banks are regulated is because they have run risk. And if everybody thinks everybody else is coming for their money, they want their money also, and then the bank is run upon. So for this reason, something that says you'll get your money back needs to be regulated to make sure that it has the ability to raise liquidity when everybody comes for their money and you're there to pay it back. Are you becoming a vehicle for people to make payments which are illegal? Are you making payments to entities that are illegal? Are illegal entities, the mafia, drug dealers, a big player in your payment system? I think they're trying to scramble to understand better. The dilemma for regulators is how to allow the search while limiting the extent of risk, both for the financial system, the crypto system, as well as for the public. The one concern the authorities have to have is that regulation shouldn't be a stamp of approval. Because we have regulated these things, the value is certified, so go ahead and invest. I don't think you want to put that stamp at this point until we understand better the nature of the beast.
Raghuram Rajan there. Now, just one more reminder. We'd love it if you can help share the word today. So please do stop checking the Bitcoin price for just a moment and jump on social media using the hashtag #PSEvents. In around half an hour, we'll be opening up to take questions from journalists around the world. But first, let's dive into the discussion. And I'd like to ask Hester, first of all, the opening film, of course, looked at the idea that cryptocurrencies are a kind of Wild West. Now, you're a commissioner of the SEC and you're one of the potential sheriffs. So, Hester, why is regulating cryptocurrency fundamentally different to traditional finance?
Well, first I have to say that my views represent my own views and not necessarily those of the SEC or my fellow commissioners. And I think that's important to underscore in this context. I've taken a bit of a different view than some of my colleagues on the way that we should approach regulating crypto. Now, clearly, if people are engaged in activities that fall within our jurisdiction, they should be complying with our rules. But one of the things that Congress did when it set us up and gave us our statutory framework, it told us that we could make accommodations so that we could achieve our regulatory objectives in a way that made sense, while also allowing new and different types of things to happen in our space. So accommodating innovation while still meeting our regulatory objectives. And that's something that I would like to see us use with respect to crypto. There are a number of areas where applying the securities laws exactly as we've applied them to traditional finance just doesn't make sense. It essentially becomes a compliance exercise that that can undermine the very value of the technology. And so I would like us to embrace some of the spirit of adventure and entrepreneurship that characterizes this industry, while also addressing some of the real concerns, and doing that in a way that makes sense for our investor protection and market stability objectives, but also for allowing people to try and experiment, and some of those experiments will fail, some won't, but allowing that experimentation to happen.
It's a very tricky tightrope, though, isn't it, that you've got to try and balance on, and there are still so many grey areas, aren't there?
Well, it's a tricky tightrope, but we have mechanisms to make it less tricky. We could be having public conversations in a manner that allows everyone who's interested and knowledgeable people to weigh in a transparent manner, so that if someone says something, someone else can say, well, wait a minute, that's not exactly true. That's how we should be doing this. That's how our regulatory framework works best, when we engage in this transparent public dialogue about what the rules should look like. That's something that we haven't done so far in this space, and I think it's really hindering us. That's what's making it so difficult to regulate in this space.
Okay, Hester, thank you so much. Well, let me pass to Kate now. And Kate, I'd like to show you this graph coming up. It's based on a Deutsche Bank projection of the growth of blockchain adoption compared to the early days of the internet. Now, first up, it's the internet, and beneath it, we can see blockchain. Now, it's worth noting that the number of internet users is counted in billions compared to blockchain's hundreds of millions. And also the dotted line showing the blockchain projection is fairly large. So I have two questions for you. First of all, do you think it represents a likely picture of things to come? And second, as a minister, how do you anticipate the problems thrown up by something that evolves just so rapidly?
I think it is rather likely scenario, yes. And I think one crucial thing to realize and accept is that the tech innovation in a broader sense, as well as the crypto blockchain technology, is there to stay. So it's not just something that appears as a trend and will disappear in upcoming years or very soon. But it's something that has had an enormous growth that we have witnessed, and it will be there. And as a regulator, or as somebody who's representing the government sector, our approach in Estonia has been to not just accept it, but to become also one of the front runners when it comes to basically taking advantage of it. When we actually decided to choose the digital path in Estonia, that was a few decades ago, then it was a very knowingly made decision or a choice to take that path. And we now see that it's, in a way, it's our obligation also to offer a very secure and friendly legal framework to fintech, to financial innovation as well. So this is why we have really chosen to introduce some of the legislation that focuses on the crypto, on the virtual assets, mainly virtual asset providers. And I think the tricky question here is how to balance it in a way that we will have the regulations in place, but yet there is enough room for innovation as well, so that we won't make a mistake to over-regulate it. So we have decided to first to focus or to describe the risks that we see, and then to focus how to minimize the likelihood of those risks to realize. So it is yet, of course, sort of new regulatory parts. But in Estonia, for example, we actually started to license already the virtual asset providers in 2017. So it's already 5 years ago when we started with it.
So you're well along the path. You're well along the path then, Kate, and certainly you're there outlining those risks. And I imagine part of the risk is that there are so many different products that get labelled cryptocurrency. They're fundamentally very different. So I want to bring in Doug now. Doug, which of these products do you think needs more attention?
Well, I do think it is important to differentiate sometimes between some of the terms here. Crypto, on the one hand, is a product. Blockchain, perhaps, be seen as more of a technology. One is being used for investment, consumer purposes. The other can be used for more broader-based purposes by behind-the-scenes players building up financial architecture and so on. And certainly, the product may be needed to regulate in one way to protect the consumers, provide disclosure, and so on, and the other may not need to be regulated in the same way. There is a difference. The growth in the crypto and blockchain markets in the United States the last 4 or 5 years has been incredible. And we are facing an oncoming regulatory response now. Just in the last week or two, in our intro, it was mentioned about the president's executive order in March, right? We're a little over a month since then. We've had proposed legislation in the Senate from Senator Toomey. We've had several large speeches by Acting Controller Su, and the FDIC putting out a letter explaining to its banks what they need to do in order to start engaging in digital assets. So on the one hand, we see that there is forming a regulatory response in the market. On the other hand, while I think everybody wishes the rules were more clear, there hasn't really been any evidence that has stopped investment in the market. The market is far larger in the United States than it was, say, 3-4 years ago at this point.
Absolutely. Well, I just want to move on to Dante now, because Dante, in his opening film that we saw, Raghuram Rajan spoke about the danger of run risk with stablecoins. Now, your organisation, Circle, is the issuer of USD Coin, the second largest stablecoin by market capitalisation. So what do you make of his remarks?
Well, run risk and, frankly, buyers and spenders remorse were two of the original sins of the cryptocurrency industry when it was first brought to light with Bitcoin. And we should remember an industry first brought to light after the 2008 financial crisis, in which we privatized gain and socialized losses to the tune of trillions and trillions of dollars. And so in some respects, Bitcoin and cryptocurrencies and blockchains and then ultimately stablecoins are a market response to very broad financial market failures. And behind them, there are a couple of core questions I always ask. Is it really your money if you have to ask someone to spend it and if you have to pay someone to hold it for you? And so this idea that you have a mobile native, internet native form of money, it should also, of course, be trusted. And therein lies, I think, an area where Circle primarily has put a lot of attention to this fundamental set of questions around trust, transparency, auditability, and then run risk. Most stablecoins in circulation, certainly through the earlier period of time, and perhaps even today, would fail to meet an even basic question of show me the money. So stablecoins are asset reference tokens that are meant to solve for buyers and spenders remorse by providing a stable unit of account and medium of exchange on the internet. But many up until now have had, let's say, trouble and maybe have fallen into the category of vaporware. In our case, we believe in a regulation first model very much, as Commissioner Pierce had outlined in the beginning. And we think these belong under frameworks close to banking or payments or e-money, effectively giving people more control over how they send, spend, save, and secure their money in the 21st century.
Okay, thanks, Dante. Well, let me bring back in Hester. What do you make of Dante's comments then that really this has been a reaction to what happened during the financial crisis? And do you think there is a real risk that actually there are a number of coins out there that simply don't show us the money?
Well, I certainly do think that crypto, many aspects of what's going on in crypto are a response to concerns that arose during the financial crisis. And and attempts by people to address problems that surfaced in the financial crisis in interesting and novel ways. So I think that's on the positive side. I mean, again, we're talking in very broad terms, and so of course there are some parts of this world that are much more transparent than others, and people need to be asking questions, and they need to be bringing the same kind of skepticism they bring to anything else in their financial lives. Now, when it comes to figuring out the right regulatory approach, I think around stablecoins, we're having that conversation now. As was mentioned, Senator Toomey just introduced a bill that would allow for some different regulatory approaches you could choose from among several approaches. So, and others have suggested the SEC could have a role. So there's a lot of work still to be done, but I think we all agree that, you know, the basic goal is to make sure that people are able to see what's backing the stablecoin and are able to have confidence in that, and that would be the objective we'd be trying to achieve.
Well, thanks very much for outlining that, Hester. I just want to bring back in Kate now, because Kate, I'd like you to take a look at this headline from Bloomberg back in October 2021, looking at a tightening of regulation in Estonia. Now, of course, you were the first country in the world to issue licenses to cryptocurrencies. Tell us exactly why and what happened.
Again, it was a decision made well, let's put it this way, that it was very clear that this is a sector that will be booming. And I think basically there were two options: whether to just sit back and see how the Wild West will regulate itself, if it will, or let others to come up with the regulations, or then to be among those who actually will frame the future regulations as well. And we chose the latter one. We started with licensing the virtual asset providers in 2017. And just very recently, a few months ago, we updated the current regulations so that we would have a more transparent sector. I think what is really important that I want to highlight here is that we are also having technology neutral solution. So we are not regulating or creating frames for a specific technology, and I think this is really crucial in this world. But we are regulating and setting frames to the virtual asset providers as entities. So there is a rather, I think, big difference and important difference as well. Where we saw where the risks were that several companies that took the Estonian licenses had really nothing to do with Estonia. And that makes us or put us in a bit different and difficult situation, so that should any of the risks materialize, Estonian other virtual asset providers will or would have had the negative effects that they would share, but those who were operating had in fact really nothing to do with Estonia. So now we have an obligation set in place that those who get the Estonian license also has to have
be based in Estonia.
Connections with Estonia, exactly.
Okay. So Doug, let me bring you in. When you look around the world, where do you think, which countries do you think, which jurisdictions are getting regulation right, and why? Kate there talked about the problems experienced in Estonia.
I don't think anybody has fully figured out the issue yet. And of course, one of the great things about the technology is that it's international, right? It can cross national boundaries quickly. I mean, we do see efforts from the global bodies like the Financial Stability Board, the BIS, the Bank of International Settlements, and other related ones to start to set standards to handle international money payment flows using digital assets. And I think we'll see more coming from that. As we know, there are dozens and dozens of countries studying central bank digital currencies, which I think we'll probably speak to a bit later, and looking at some of the issues that come along with those types of technology when employed. Again, I can only really speak to the US and perhaps the UK a little bit, which is where I practice. I think the UK has done some great things. Certainly their sandbox style of regulation for building up smaller companies was successful. There's several examples of that. In the US, we can't really do sandboxes. We don't have that authority. However, we certainly have seen a lot of talk about the regulatory perimeter here, what should be regulated and what should not be. And that perimeter has been moving in the last couple of years, in the last perhaps 4 years or so, to account for digital assets and their regulation. And perhaps will continue to move as regulators sort of extend to where the risk is. One thing I'd just like to mention is, among the risks that have been really considered here, it was in the president's executive order, it was in the president's working group from November of last year, is financial stability. Looking at the risks of these products on a national scale, which really then looks at them perhaps on more of a global scale, given the extent of the US economy and its reaches. Looking at them not as individual products, but the effect of them and the effect of the users and the companies that employ them on the financial stability of the United States economy itself. And so there are, various ways of regulating, right? You look at the entity, you look at the product. Now we're looking at the country as well.
Absolutely. Okay, well, let me pass over to Dante, because there, of course, Doug's highlighting the potential for systemic risk, and presumably stablecoin issuers like Circle would really like to see some kind of regulation on capital requirements to weed out bad actors. As you said before, some players have an inability to perhaps show the money when it really matters. But what should that look like?
Well, in our view, it should be pretty straightforward, right? And in fact, we think much of the practice that we have put in place around USDC and trust and transparency of USDC, which is over $50 billion in circulation, is that you should have a sound money approach, right? Unlike traditional banks, which are taking your dollar and then fractionalizing a share of that dollar effectively to put out leverage and put out loans in the economy, the totality of our reserves are first and foremost held in order to provide backing to all of the USDC tokens in circulation. That's one standard. The composition of those assets should also be very conservative so that you do not introduce undue risk or volatility to the stablecoin. The second piece of the puzzle is to be able to withstand public scrutiny in the form of attestations of the sufficiency of reserves, the composition of reserves over time. And then lastly, I think it's really critical, a company like Circle has created a cottage industry in the banking sector for asset management partnerships and for effectively the reserve management process. Just yesterday, we announced a major investment in the company from major institutional players like BlackRock, Fidelity, Marshall Wace in the UK, and others. That just demonstrates, I think, a possibility where this becomes mainstream financial markets infrastructure and much less jargon-ridden, as we would not even once mention the word blockchain or cryptocurrencies several years from today, because I think the technology will fade to the deep background.
Okay, well, Kate would like to come in here. So, Kate, what would you like to say on Dante's point?
I just want to also explain that again, coming to Estonia, we actually did choose between the two different approach. One was basically a rules-based or a rules-centered approach, where everything to the smallest details would be set and framed by the laws. And the other option was a risk-based or a risk-centered solution, and we should choose the latter one again. We saw that the solution where actually the rule making has been delegated to the entities themselves. is and can be rather effective. So we know what the risks are, and the task to mitigate the risk is there. But how exactly those risks will be mitigated should not be, and I personally think that cannot be really regulated by the law, because again, the technology changes very fast, the whole sector changes very fast, and it would be impossible to update all the rules in the law every time a new solution comes up. So the risk-based solution is something that might work to our understanding better when it comes to the sector.
Okay, Kate. Well, thank you very much. It certainly seems that there are so many different angles to this. We're going to come to a few more in just a moment, but don't forget, we'd love you to get involved with today's event. So please do help spread the word using the hashtag #PSEvent. So I'd like to come to Doug now. And Doug, we've talked quite a lot about regulation, but just one pretty direct question. What would bad regulation look like to you?
Sure. And I may have mentioned or failed to mention, I'm an ex-Federal Reserve lawyer. So I come at regulation from a training of their point of view, which is a little bit different from what Commissioner Pierce has done, although similar goals and aims. Bad regulation and it would certainly look like one that squashes innovation, fails to protect people in the proper way, entrenches existing monopolies, and keeps competition from occurring, and in general, just limits the ability of entities in the United States to compete globally. Now, regulation, of course, is not a fixed thing. It goes back and forth. We've certainly seen that in this country, just looking the last 14 to 15 years from just before the financial crisis to now. We've seen several times where regulation has been tightened through legislation or otherwise, then relaxed a little bit more. Now it perhaps is being tightened a little bit again. So, you know, there is no one right way to do things. The proper way to do it, of course, is for the regulators to be listening to the stakeholders, industry, Congress, other people, lobbyists, consumer groups, et cetera, and adjusting the regulation as is necessary to achieve those goals.
Well, that leads me very nicely on, thanks very much, Doug, to this tweet from Congressman Tom Emmer. And Hester, I'd like your view on this. It says, crypto startups must not be weighed down by extra jurisdictional and burdensome reporting requirements. We will ensure our regulators do not kill American innovation and opportunities. Now, he was one of 8 congressmen who recently wrote to the SEC chair, Gary Gensler, asking whether the agency's investigations into crypto are consistent with the Paperwork Reduction Act. Do you have any sympathy for his concerns?
Well, I certainly don't want to speak to any ongoing enforcement investigation, but I think that there are some real concerns about the way we've approached this space. And again, it goes back to needing to have public, transparent conversations as we try to figure out what the right regulatory approach is, rather than trying to take a one-off approach where maybe we craft a settlement with a particular entity that might work for that entity, but that will not work for the rest of the industry. I think we need to really retain a mix of wonder at the new innovation. You know, there's something delightful about seeing new innovation, but also a skepticism. We need to, as Kate mentioned, technology neutrality is good. Sometimes you have to make adjustments to recognize certain aspects of the technology, but your rules should be written in a way that they're principles-based. And then you should also look at ways that you as the regulator can take advantage of the new technologies to do things better. Mm-hmm. But I think, the way to do this is to do it in public instead of to try to have these sort of backroom conversations with individual market participants.
Okay, well, let me bring in Doug now. I know he wants to make a comment on this point.
Well, just the tweets, and we do hear those words constantly. I think you're perhaps wading into politics a little more than perhaps you may want in this comment. But I think, I'm a very factual, data-driven person. And there just is no evidence of that right now, that, the either regulatory uncertainty or potential regulation of the sector has been driving capital and innovation offshore. In fact, the last 4 years clearly show the opposite, right? Companies have moved here. They've tried to move here. I mean, we could say a lot about making it easier to move here. Absolutely. There are barriers to entry that, perhaps arise mostly in the banking sector, but also in other places that people should look at, because we do want people to come in. But the fact that we're starting to regulate either crypto or blockchain on a wholesale basis there's no evidence of anything driving anybody anywhere.
Okay, well, thanks very much for that, Doug. Let me bring in Dante. What's your view on this?
Well, some have taken this idea of a digital currency space race as a zero-sum game, and that for a very long period of time, the United States was being framed as a net loser of the digital currency space race. I actually took to the pages of Project Syndicate and wrote sort of a counter narrative about how, in many ways, the United States and the dollar is already becoming the currency of the internet, in no small measure because of the sum of activity that both Commissioner Pierce described and Doug described a moment ago. And then certainly, if we look at a company like Circle is licensed in the US from sea to shining sea. And so when we say that the industry is not well regulated, I have a whole country of state banking supervisors and commissioners who would beg to differ. The question is, there's a void of federal regulation. And the void of federal regulation blunts American competition in this space overseas, because the states do not have a seat at the Bank for International Settlements, the Financial Action Task Force, the Financial Stability Board. Therein, we are represented by our federal authorities. And oftentimes, we're left alone to compete with the entire planet. And so I think that's the gap that we aim to fill, hopefully, in U.S. policy.
Okay, Hester, could I bring you in here? What's your take on that? Do you think there is a gap to fill in policy?
Yeah, I mean, I certainly disagree with Doug about the fact that what I hear from people all the time is that if there were more regulatory clarity, there would be more people coming into this space, and there'd be more comfort about doing things. We now see innovators in this space and project developers in this space spending a ton of time thinking about regulation, when I'd rather have them thinking about trying to make what they're doing better. If we had clearer regulation, or if we allowed for experimentation in, with regulatory parameters, there'd be a lot more activity going on in this space. So I think it's a mistake for us to assume that everything's going to happen in the US, because everything has a lot of activity always has happened in the US. If we don't get this right, I really think things will move overseas.
Doug, do you not think that there's a need for more clarity?
Oh, I agree with what Hester is saying. I didn't intend to give the impression that we didn't need clarity, but I think what we're talking about instead is whether, if clarity comes down and says, we're going to apply Howey and the 90 years of securities law to the crypto space, that's clarity, but that's not what the industry wants, or what Hester has said. And I think, there's a lot of good points she has made on that. So I'm not at all disputing clarity, but I think the argument is, if there's more clarity than the industry wants, will that drive innovation offshore? And that I'm not sure about. I don't see any evidence of that yet. I think the inherent advantages of the US, both in its dollar-based economy, in its clarity of law and certainty of outcome, certainly have so far outweighed, all of the regulatory hurdles here. The example I always give is, we have the most heavily regulated capital markets in the world, but we also have the deepest and most liquid capital markets in the world. So more regulation doesn't always mean less business, less innovation, but it does raise compliance costs, hurdles, and so on. And that's why I was mentioning sort of the regulatory pendulum before. It's important not to view it as a fixed thing. It's important to try constantly to be getting it right.
Well, I'm going to take that pendulum and swing it over to Kate now and get her view on this discussion, particularly given the experience in Estonia. Kate, what's your take on this?
My experience says that regulation, particularly if it is regulation in a new sphere or a relatively new regulation, will function well if it is designed with the stakeholders that it will have an impact on. And this is, again, I will come back to Estonian example and our experience creating the whole digital nation. We started with the IT, the digital sector, a few decades ago, and now I think it applies also to trying to create a regulatory framework for fintech, for crypto as well, crypto world. And my recent experience says that actually the interest of having a transparent, well-functioning, smooth, and innovation-friendly framework is exactly the same for the stakeholders, for the sector, as well as for the regulators. What is the difference? And I'm not talking about the US right now, but about our own experience, is that the level of knowledge and understanding of how this relatively new part of the fintech world functions is a bit different among the regulators and among the sector. Mm-hmm. And this is something that every now and then still has an effect as well. And while being very self-critical towards the regulators, I say that there is certainly also a need to very quickly basically educate ourselves as regulators to be up to the task that we have in front of us.
It's certainly a big task. Okay, well, we've got to wrap up this discussion shortly and take some questions from journalists. But before we do, Dante, I'd just like to take you on a trip down memory lane with this clip from 2019.
Facebook announcing a new digital currency called Libra, and Facebook says this digital currency aims to make it as easy to send money around the world as it is to send a photo. Now, the currency is set to launch in the first half of next year, and it will be run not by Facebook, but by a nonprofit in Switzerland. And unlike Bitcoin, Libra, this digital currency, will be backed by real money. So if you put in $1 or some other currency into Libra, you'll get $1 or the equivalent out. Now, the goal is for that reserve of real money to make the whole currency more stable, unlike Bitcoin, which is obviously very volatile.
Dante, what a difference a few years make. Now, for anybody watching who doesn't know how that story ended up, Facebook's Libra was later named Diem. However, it was met with a really harsh response from regulators and was eventually dropped. And last week, news emerged that Meta, as Facebook is now called, of course, has new plans for what's been called Zuck Bucks. What are the lessons here then, Dante?
Well, a great trip down memory lane. So as the listeners may know, I was once upon a time the vice chairman of the Libra Association. So I've had a front row seat in the conversation globally about the future of finance, payments, and money. And all I can say is that if to understand the future, past is prologue. Any kind of innovation, depending on who the sponsor is of the innovation, will either import the good and the bad attributes and the trust or the mistrust of those sponsors. But I would point out in hindsight, looking at the world and looking at our inability to move money at population scale through the course of COVID-19, we shaved off $200 billion from cross-border payments or remittances from the people who could afford it the least. Whole countries and fortress nations like the United States moved trillions of dollars of government-funded money to citizens across the country to prop up weak segments of the economy. But we subjected that money to very slow, antiquated, leaky pipes. And so the advent of instant, real-time, safe ways of moving money, and then to have changed the form factor of money into a trusted instrument like USDC, I think these are really, really important innovations today being framed somewhat as competing with the traditional financial system. But I think if we get it right, we're completing a lot of unfinished work. Your and my financial needs do not take bank holidays, but yet the banking system shuts down, and the banking system is anything but global and anything but interoperable. So I think these types of innovations are really critical. And the Libra project in many ways was one of the catalyst of a lot of the efforts among central banks and others to understand this space.
Yeah, and it's certainly watch this space. Okay, well now it's time to open up the floor to questions from journalists around the world who've been watching this. So first of all, a question from Catherine Duan from Sina Finance, and she sent in this question. On April the 4th, SE Chair Gary Gensler announced several initiatives to expand investor protections in the $2 trillion cryptocurrency market. So what important cryptocurrency regulatory policies do you think will come out next? So I'm going to put that question first to Hester.
Well, again, I've objected to the fact that we haven't really taken a clear regulatory approach. We've taken much more of an enforcement-centric approach, and I think sometimes that approach just manifests itself in ways that don't make any sense for investor protection. So I hope we'll see a transition from that. But you know, you see, for example, in the results of our efforts mean that people can't get access to products that they were using. I'm not sure that's a very good outcome. So I hope whatever it is we do will be designed to allow people to use these products and services. I mean, I think one area that Chair Gensler has really spoken a lot about, and I expect that in this year we'll see him speaking more about it, is the regulation of crypto trading platforms at the federal level, which is something that he certainly wants to do. He recently mentioned that he would be willing to do that in conjunction with the CFTC, the Commodity Futures Trading Commission, and that I think would be a valuable conversation for us to be having together with our sister regulator. Although Congress may decide that someone else should be the regulator of crypto trading platforms, not either the SEC or the CFTC.
Okay, so let me put that same question to Kate. I mean, what do you think about future regulation? What else would you like to see? Perhaps actually regulation coming from the US?
Well, I will not take that slippery slope and comment too much on the possible US developments, but I'd rather say that I think those states and countries that still do not have much of the regulation in place, that very soon we will see rather rapid reactions there. And I'm afraid that the first reaction will be to over-regulate the whole sector, which is something that I think should actually be avoided. I would rather see that the regulations we have in place, that we should concentrate to implement them now. And also, since we are talking about the fintech, the regulations that regulate the fintech sector, I would also very much like to see more opportunities and possibilities given to the technology itself. Again, we don't need to have a very burdensome reporting regulations in place if we have a technological solution that could solve the similar problem with a much less time and in an easier manner for entities. But I think one of the regulations that will be discussed a lot is how we can implement and should we implement the travel rule also in the and for the virtual asset service providers. And again, if that will be a demand, how we can use the technological solution there to make the final solution easier for the service providers.
Okay.
But my personal, let's say, I would certainly favor that instead of keep on inventing new regulations, we will focus on what we have already in place and make those really work and implement them in a proper manner.
So focus on what we have right now. Okay, thank you very much, Kate and Hester, for those responses. Let me hand over now to the reporter from Khaleej Times in the UAE. Could you please introduce yourself and pose the question?
Sure. Hi, Susan. Nice to meet all of you. My name is Sandhya DeMello. I'm a senior reporter with Khaleej Times newspaper here. And I've been covering crypto with a lot of interest. And yeah, the question, any of your panelists could answer this question for me. So in UAE, we have noticed a lot of operators coming here and wanting to trade in cryptocurrency and stuff like that. But my fear as a journalist is how does an investor, while on one hand, you have institutional investors like MasterCard, Visa, adopting cryptocurrency. And on the other hand, the individuals, because of the lack of awareness, lack of regulation, I don't know where does an individual investor go, because it's ultimately your hard-earned money that you'll be investing. And is it really worth the risk? I don't know. Maybe Dante can answer this question to me. Because as an individual investor, I think every country owes a responsibility to ensure that the investor's money is protected. But I think there is a lack of regulation, lack of clarity too. And on the other hand, people are investing at the speed of light in cryptocurrency. Where does all this stand and where do we head to, Dante, if you could, or anyone else in the panel could answer my question?
Dante, over to you.
Sure. Well, I'm happy to provide an answer to that. First, begin with the point of this industry and the entirety of it may not be right for everyone, but everyone's rights to participate should be protected. Point one. Point two, as a general matter, if to be an investor, we often have in the regulatory domain consumer protection standards that preclude people who do not already have money from participating in the world's most money-making, money-creating, and money-preserving assets. And so that's why so much of the cryptocurrency market has been and remains very much a protest vote to entrenched approaches on Wall Street and elsewhere around the world. Now, that doesn't mean that the industry should be given a complete pass, nor should we, for that matter, solve with enforcement what can be solved with better risk disclosure facing the consumer. And so the advice to crypto investment would be the same of any other investment. Never invest more than you're prepared to lose, and never invest in anything you do not understand. So it may not be right for everyone, but I believe very deeply in everyone's rights to participate. And it should also be worth mentioning that this has been the best performing asset class in the last decade. And so to have missed that, partly because of consumer protection or regulatory paternalism, or for individual fear or the lack of wherewithal, I think would have been a miss. And so the more it becomes a part of the regulatory perimeter, the better. And the UAE particularly has been very active lately in inviting major companies to invest in the UAE.
Okay, Dante, thank you very much for that really full response. I'm going to cross now to the journalist from Business AM, who's in Nigeria. Please, can you introduce yourself and pose your question?
Hi, everyone. My name is Charles Abuede. I write for Business AM here in Nigeria. Okay, I have a few questions, and I really want to appreciate everyone on this panel, everyone on the panel here. You guys have been giving us, the hints, the way to go as regards of this cryptocurrency or this digital assets. To begin with, well, anyone can answer. I just have like 4 questions here, though. Anyone, could answer any. And one of the questions will be, specifically directed down to Hester, who happens to be the commissioner. Definitely, that will be my second question. So to start with, the very first question is, we're talking about crypto, talking about blockchain technology, talking about, like say banks, crypto exchanges, and the likes. I actually want to know, how do we harness the power of crypto? This currency as a digital asset or as an asset class. How do we harness the power, alongside the technologies involved, some of the crypto exchanges we have, around, and other virtual asset providers? How do we harness the power just to make, this currency and the exchanges or the technologies involved to be more efficient and transparent?
Thank you. I'm going to put that question right to Hester right now. So how do we unleash the power of cryptocurrency, but at the same time ensure that it's still transparent?
Yeah, Charles, that's a good question. And I think those are some of the issues that people are wrestling with now, right? So the technology itself really lends itself to transparency, to open source technology, to allowing everyone to have equal access to information. And so we should be working to figure out how we can, hold people accountable, make sure that that's actually being carried out. And I think if you take a look at a recent paper by Professor Chris Brummer, he kind of thinks through how we can actually take advantage of the technology to do disclosure better, to achieve our investor protection objectives better. So that's what I'd like to see us do, is view the technology as a way to better achieve our regulatory objectives.
Hester, thank you, and thanks very much to Charles for that question. We're going to cross to South Africa now and take a question from a journalist at the Daily Maverick. Please introduce yourself and tell us what you'd like to ask.
Hello, everyone. Thanks for taking my question. And it's been a fascinating discussion. And I mean, it does demonstrate, I think, to all of us how we're just feeling our way in the dark. But I guess my question is really about how the utility of cryptocurrencies. At the moment, I think, if I'm guessing here, but you will correct me if I'm wrong, most people have bought cryptocurrencies. The people who have bought them for investment reasons or for savings reasons, I guess, or for just for the fun of it. But the real utility of crypto is within trade, and having a very quick, secure, cheap way of transacting. I just wondered what you thought the blockages were to encouraging crypto as a trading mechanism, not just as a saving mechanism. It does strike me that if it is increasingly used as a trading mechanism, it would be, in effect, in competition with national currencies. And if it's in competition with national currencies, governments are going to be inclined to try and restrict it. Or am I wrong there?
Well, let me put that question first.
Rather vague, but you get the point.
Certainly do get the point. I'm going to put that question very briefly first to Dante, and then I'd like to get the view of Doug as well. Dante first.
Sure. Well, it is a powerful question. In fact, I mean, this question of sovereign money and competition coming from privately issued digital currencies or cryptocurrencies has animated a global conversation amongst central banks, of which around 90% of them are in some degrees of experimentation or piloting of digitizing their national thrift. But it then begs the question in terms of the most fundamental utility of these innovations, I think is evident in the horrible tragedy we see taking place in the Ukraine, where when all other systems fail, digital assets, blockchain-based finance, and digital currencies are a form of banking and a form of value that travel with you. Armed with little more than an internet-connected mobile device, that's a very, very powerful opportunity. And you see it playing out in the most extreme cases, like in Ukraine. We have pilot projects at scale in Venezuela, and I think these types of innovations have huge implications to be a part of a new humanitarian blueprint for how money moves, again, back to a world in which our financial needs are always on, but the banking system takes bank holidays.
Mm-hmm. Okay, thank you. And Doug, very briefly, what's your take on this?
Well, I think, it's important to get terminology correct. They're called cryptocurrencies or perhaps fiat crypto. Those terms are wrong. It is not a currency basically anywhere. Currencies are only issued by governments. If governments do digitize, as Dante said, that could be a cryptocurrency, but to date, there really aren't any. I'm not sure I would call them in competition with them. Looking solely at the United States, the Fed does not measure cryptocurrency as part of its M measurement, deciding on what is the actual money that's in circulation when it uses that calculation to formulate monetary policy. That being said, it clearly is an asset class. Mm-hmm. People are investing in it. There's a lot of leverage in the system that has built up. One of the problems, though, is it's not one, or, you know, this may not be a problem for some people. It's not really running through either the banking system or the investment advisory system that's been in place in the United States for a long time. So as Acting Comptroller Sue said in a speech last week, most of the investments being done by low and moderate income people and disproportionately of persons of color, which leads really to a question of whether people understand the risks and know what they're getting into.
Okay, thank you so much, Doug. And I'm afraid we've run out of time for this conversation. Thank you so much to all of our panelists for taking part. It's been a really fascinating discussion. As for the rest of you, don't go anywhere, because coming up after the break, we'll have Jeremy Allaire, co-founder of Circle, the company behind USD Carmen Reinhart, the chief economist of the World Bank. Barry Eichengreen is Professor of Economics at the University of California, Berkeley. Alex Borniakov, Deputy Minister of Digital Transformation of Ukraine, and Eswa Prasad, Professor of Economics at Cornell University. All that in a little over 15 minutes' time. Just enough time to check your risk if you're so inclined. This is Finance 3.0, brought to you by Project Syndicate. See you in a minute. And welcome back to Finance 3.0, brought to you by Project Syndicate. I'm Susanna Streeter. The Crypto Stress Test is the name of this, our second session of the day, where we'll be asking if the crypto boom of the last few years will keep momentum in what may be a completely different financial era, potentially marred by any combination of inflation, supply chain issues, COVID, but without the support packages, the end of the cheap fiat money era and the war in Ukraine. I might have even missed a few. Well, to help us navigate the macroeconomic minefield, we'll be hearing from Jeremy Allaire, co-founder of Circle, the company behind USD Coin, and Alex Borniakov, Deputy Minister of Digital Transformation of Ukraine. We'll also be joined by Barry Eichengreen, Professor of Economics at the University of California, Berkeley, in conversation with Eswar Prasad, Professor of Economics at Cornell University, and Sheila Warren, Chief Executive Officer of the Crypto Council for Innovation. But first, what impact does economic turbulence have on cryptocurrency? In a landmark piece of research last year, two of the world's leading economists, Ken Rogoff and Carmen Reinhart, working with a young PhD economist, Clemens Lübner, looked at that question. To talk through what they found, here's Carmen Reinhart, Chief Economist at the World Bank.
I don't think I need to tell this audience about the growth in the use of cryptocurrency, but I think an area that's been relatively less documented is the use of crypto in remittances, and very interestingly, the use of crypto during times of stress, during times of crises. Let's put it in perspective. Remittances are not small potatoes when it comes to many developing countries, and in Central Asia, which is much in the news these days, remittances account for 30 and even as high as 40% of their GDP. And it is noteworthy that crypto usage during times of stress, nothing less than skyrockets.
Tourists heading to Greece are told to take cash as the country's banks announce they'll stay closed tomorrow.
When in 2015, Greece introduced capital controls and there was a banking holiday and people did not have access to their cash and withdrawals in cash machines were limited, that we saw a spike in the use of crypto for cross-border capital flight. And among the very interesting cases, of course, that are on full-fledged ongoing, we have the cases of Lebanon, Argentina, Venezuela, and of course, the long-standing fragmented capital markets in Nigeria. And more recently, of course, with the widespread introduction of strict capital controls in Russia and the Ukraine, and how these impact Central Asia, which is intimately interconnected with the Russian banking system and the capital controls there. Crypto is our new age of capital flight. The big challenge looking ahead is, of course, what this will all mean for regulatory and financial sector policies. How do you go about regulating crypto usage and still taking advantage of its very useful provision of services? I want to reiterate, do not underestimate the importance for many countries of crypto as a vehicle for remittances and regular cross-border transactions. So I have to be very upfront and say the space that we looked at within the crypto market is tiny, but the implications for its growth and it being the latest entrant, if you will, into the broad spectrum of cross-border capital movements should not be underestimated.
Well, that was Carmen Reinhart, Chief Economist of the World Bank, with some really fascinating research. Well, in just a few moments, we'll be showing you the QR code for our exclusive NFT POAP for today's event. So if you missed it first time ready, do please get out your phones. But before that, perhaps the biggest stress test the global economy has faced and could face this year is the war on Ukraine. What differences have blockchain technologies made to the conflict? How has the war changed the tech? Well, to help answer that, here's Alex Bonyakov, Deputy Minister of Digital Transformation of Ukraine, and Lisa Bukureva, who's an NFT artist from Kiev who was forced to flee to Moldova.
Був мій візуальний щоденник воєнного часу. Бо коли почалась війна, дуже змінюється відчуття часу. Тобто, здається, що ти не відрізняєш дні. Здається, що це один день. І я почала вести щоденник, щоб просто їх відокремлювати якось собі в пам'яті потім. Мене звуть Ліза Букреєва, мені 28 років, я з Києва. Декілька років я займаюся фотографією.
I'm Alex Bornikov, and I'm a Deputy Minister of the Ministry of Digital Transformation of Ukraine. We were always promoting crypto inside Ukraine, telling everyone that there are a number of great things that could be achieved by using crypto. But once we faced with this war situations even more, you know, there are a lot of refugees. More than 3 million people fled Ukraine, which is a huge tragedy. And some of them were separated. So the crypto is being used as a way to help families to exchange money.
Особливо, коли ти їдеш з Києва під час воєнних дій, то криптовалюта, певно, що в таких умовах це просто спасіння. По-перше, оскільки вони ж в мене в гаманці, так, я можу поводити в будь-який час і конвертувати вже валюту в країні, де я знаходжусь. Тут, в принципі, я платила за житло цими коштами.
Cash and even bank transfers are limited right now in Ukraine. So crypto for some people is a real alternative to all other means of payments, especially when we're talking about payments abroad.
В мене є світлини з людьми, які готуються до війни, цивільні навчання. Я думаю, що вони, можливо, дали розуміння і людям з інших країн, що в нас кожна людина була готова захищати свою землю в незалежності від віку, професії та їх досвіду якогось.
CryptoFund was created right after the war, reached more than $60 million in donations, which is a significant amount, which helps to support our militaries, our citizens in the difficult times like that. This is really something. What is more important, their flexibility and the speed which cryptocurrencies operate is relatively quicker than a banking system with their traditional currencies. I think there will be more and more countries that are going to adopt it.
Alex Bonyakov and Lisa Bukureva there. And if you're interested in buying any of Lisa's work, you can do that on her Instagram account, Lisa_Kalev. Now, another reminder that if you'd like to join the conversation today, social media is on hand to help. We'd love to hear from you, so please do get involved using the hashtag #PSEvents. Now it's time to excite the crypto natives and also a confused shrug perhaps from the skeptics. Here's the QR code that will link you to our POAP NFT. The token will prove your attendance here today, and even better than that, it's absolutely free, so why not give it a go? You might just like it. In about half an hour, we'll be bringing in another panel of journalists from around the world. But first, it's my really great pleasure now to introduce the guest for this panel, Barry Eichengreen, Professor of Economics at the University of California, Berkeley, Eswar Prasad, Professor of Economics at Cornell University, and Sheila Warren, Chief Executive Officer of the Crypto Council for innovation. So Eswar, let me leave it with you to kick things off.
Thank you, Suzanne. We are certainly at a very interesting juncture in the development of crypto. So as I was working on my book on the future of money, which was published last year, I could see a variety of cross currents coming into play here. One, of course, is related to the possibility that crypto technologies could really democratize finance in a very fundamental way, affecting financial markets and institutions, central banking, and indeed the international monetary system. But there is a question about whether cryptocurrencies, in addition to possibly democratizing finance, might also create risks for the financial system and might create even greater stratification and inequality in our society simply because you have a lot of people who are buying into this technology without fully understanding it, while many of the benefits go to those at the top end of the economic spectrum. There is another set of interesting issues raised by cryptocurrencies about whether we are entering a new era of currency competition, where you could have, within countries, stable coins and other types of new mediums of exchange competing with fiat currencies. And of course, central banks have started responding to this by issuing digital versions of their own currencies. In addition, there is an interesting element about whether the international monetary system is going to be fundamentally altered in some way by the emergence of cryptocurrencies, or at least by cryptocurrency technology. Now, to be honest with you, I find cryptocurrencies and the technology underlying them to be a true marvel. But of course, they haven't really delivered on their promises working well as mediums of exchange in facilitating trade and financial transactions. But in fact, they have become speculative financial assets to some extent. On the other hand, the blockchain technology, which I think is going to be the real legacy that Bitcoin bequeaths to us, is, I think, going to have legs in terms of creating an entirely new financial ecosystem that, with certain guardrails in place, could certainly bring a lot of benefits. Now, in the international space, Carmen Reinhardt already referred to how we might have fewer impediments to international capital flows. We could potentially have a rising amount of international competition among currencies as well. So we have two people who are ideally poised to talk about these seemingly disparate, but in fact intimately connected sets of issues. Barry Eichengreen and Sheila Warren. Barry, you've written recently about how there is a possibility that we might have a new era of currency competition, although you characterize it in an interesting way, where you talk about how the dominance of the dollar might not really be affected as much as the fact that you have a reshuffling among other currencies, with many of the traditionally what were thought of as the second or third tier reserve currencies playing bigger roles. But in your estimate, what really should we be looking for in terms of changes to the international monetary system, thanks to cryptocurrencies, thanks to what we are seeing in terms of the use of crypto in the Russian invasion of Ukraine and so on?
So in the work you mentioned, Eswar, we do see the development of a more multipolar, if you will, a more decentralized international monetary system with a expanded role for non-traditional reserve currencies other than the big four, if you will, the dollar, the euro, the pound sterling, the Japanese yen. My view is that central bank digital currencies, which is where, in a way, crypto intersects with the international monetary system, are not going to be a game changer. They would have to be used across borders. And I think there are formidable obstacles to that happening. Not so much technical or technological. The techies can solve the problem of multiple CBDCs running on a single blockchain. But I think the governance problems would be severe. Think about governing world trade through the World Trade Organization. I think governing that single blockchain would require a degree of comity amongst governments that we simply don't possess. So the international monetary system is changing. It will continue to evolve. I'm not sure that crypto in the form of CBDCs will be a game changer.
But what about the emerging market countries in particular, Barry? Do you see major threats to them in terms of greater capital flow and exchange rate volatility? in an already very complicated world for them?
Well, I do, and I think that the maintenance of capital controls, limits on those capital flows, can be an important safety valve for them, if you will. And there is a risk that crypto can be an avenue around those controls. So that's something for regulators to be aware of. The problem being that the financial innovators run faster than the regulators.
Yeah, that's a good point, and that's a good segue into your area of expertise, Sheila. I know you've been doing some really important work in terms of thinking about how this technology can undergird, important innovations in the financial system. Where do you think we are in terms of innovating with blockchain technology? Do you think all the promise that we had seen for this technology is really bearing fruit, at least in the short term? And what do you see as the big challenges?
Yeah, thanks, Ishwar. It's great to be here. Well, I think look no further than what we just saw out of Ukraine. I think that it's tragic and unfortunate, but we are seeing that as a proof point, if you will, for the necessity, I think, of a form of currency that can cross borders very easily, as we heard from the artist who was telling her story, that can be activated in times of crisis. We're watching real time a world government actually crowdfund using cryptocurrency, humanitarian assistance, and a war chest, which is really staggering and a bit mind-blowing. That was often a scenario painted in the early days by many in the crypto community as something that could potentially arise, and to see it happening in real time is shocking, frankly, even to those of us who are believers of the importance of this particular innovation. Now, I think that what we're going to what we're going to wind up with here is going to largely depend on regulation. And one of the reasons I'm spending so much of my time focusing on regulation and policy is because I worry that what we're going to do is just recreate almost exactly the system that we currently have, because we're not going to be innovative enough in the regulatory sphere. And I think Barry's point's a good one. Innovation, regulation, and policy tend to lag innovation. There are actually good reasons for that. You want to wait to see kind of how something evolves before you bake parameters around it. In this case, we are actually seeing a lot of activity all around the world, from not just the big four reserve currency countries Barry mentioned, really all over the world, in terms of how do we make sense of this? We know that this is a rising market. We know that the adoption curve it's not hockey sticked yet. It's going to get there. And so I think a lot of regulators are seeing this as parallel to the current financial system, and not always in ways that they find attractive or appealing. I got into this space because I was very concerned about the market failure, I think we should call it that, of the current financial system, and how so many people are left out of that system without the access to generate wealth, with very high fees when it comes to performing functions like remittances and the remittance economy that Carmen mentioned earlier, that are so critical to their and their families' well-being and their communities' well-being. And I thought that it was a shame, it was a tragedy that was happening, and that is largely a result of the regulatory regime, not necessarily the technology or the types of currencies that are available. If we simply port that entire system over into this new innovation, I do think we're going to recreate a lot of the challenges and obstacles that came before, and I think we can do better. So part of what I have encouraged by and hearing so much more of is the acknowledgement that while crypto does bring some new considerations, in some cases some new challenges, it also brings new opportunities and benefits to achieve policy goals that we can all agree are in the public interest: consumer protection, prevention of fraud, tracking of illicit activity, and therefore blocking of it and punishment of it. All these things, there are aspects of this technology that can support those efforts in addition to providing new considerations.
So that's a relatively positive take, I think, Sheila, on what can be accomplished through blockchain technology. And I largely share your view that I think there is a huge amount of promise in the new technologies. So if we port this promise over back to the international monetary system, Barry, Anish, subject that you have taught greatly and written, extensively on. We've talked about how remittance flows might become a lot easier, which is going to be good for many developing countries. We've talked about some of the challenges that emerging market countries might face. But in terms of improving the structure of the international monetary system and all the deficiencies that are out there, do you see any fundamental realignment coming or anything coming out of the crypto technology that might really get us to a better place in terms of international financial stability? And as a related matter, do you think we're in a position to really set up regulation at the international level that I think is really going to be necessary to bring this new sort of technology under some sort of regulation?
Sheila may disagree. She may illuminate in a moment, but I think we're still in the Wild West stage of figuring out how to regulate these digital innovations, that there is no international consensus. So I applaud what Sheila is doing in terms of trying to provide a venue, if you will, for discussion to move us toward that. I would say the principal merit of crypto is that it directs attention to all the innovation that's occurring in the digital sphere. So crypto is a subset of a variety of instant payment schemes, for example, that don't involve blockchain. Blockchain itself disguises a myriad of different technologies, public blockchains, private blockchains, permissioned blockchains. So it's a little hard at this point to know exactly what we're talking about. To provoke you a little bit, Eshwar, whenever I go online, I see statements to the effect that we're on the verge of a blockchain revolution. Well, we're always on the verge, it would appear. And I don't see the killer app of blockchain out there yet. I live on the edges of Silicon Valley, and people come and proselytize where I live about Web 3.0, built on crypto as a platform. And again, I think all of this is assuming a world without trusted intermediaries, where I think there still is a role for trusted intermediaries. Blockchain can track information and transactions, but if the information that goes in at stage one is, to pick a word, fraudulent, everybody is tracking something that is fraudulent. The smart contracts built on crypto assume a degree of sophistication, technological as well as financial, on the part of the user that may not be present. So I think there are plenty of things to worry about.
Certainly, Barry, you're amidst the land of true believers out on the west coast of the US, and I think you've nicely characterized where we are right now. I think the promise still needs to be realized. Although building upon something that you said, the real value of the cryptocurrency revolution might be to show or highlight some of the deficiencies in the existing financial system. Not that we weren't aware of these deficiencies, but the fact that our payment systems, retail payment systems in the US, our international payment systems, the ability of the financial sector to truly reach the masses, especially the downtrodden masses, I think those are real areas where we need to do a lot better. And perhaps the cryptocurrency revolution is shining a light on those weaknesses in our traditional finance. So coming back to you, Sheila, we speak about regulation being necessary to get the benefits of this innovation while managing the risks. Do you think we are moving in the right direction with, say, the President's order on digital assets and the pathway it seems to be showing us? And what do you think should be the key elements of a regulatory framework that really gets this trade-off right?
Well, I'm going to start by pretty violently agreeing with you, Barry. I do think that we are still a bit in the wild west of the regulatory scheme, and there isn't necessarily consistency, particularly across jurisdictions. And, I'm not here to speak to motivations, but it is certainly interesting to observe how reactive different jurisdictions seem to be. A lot of activity coming out of the European Parliament, and then you see the UK coming out with a very different stance on things, right? There's activity in India, and then you've got Korea being super positive on this now with a new president, and you've got India being a little bit more cautious in some ways. So we're just really seeing a lot of the major markets on the one hand, but also kind of major financial powers really just showing up to this and kind of feeling their way. So I was very heartened by President Biden's executive order out of the administration for one main reason. Two main reasons. One is I think it is now impossible in the United States to responsibly talk about this innovation in black and white terms. I think that executive order landed that this is a complicated ecosystem. It's got a variety of different offerings within it, which will hopefully play together nicely. I'm speaking of CBDCs, stablecoins, crypto, et cetera, NFTs, all these different things, that there are benefits, there are also challenges. And so I think all the sort of really dramatic rhetoric we've heard, that Bitcoin is evil or Bitcoin is going to save us or whatnot, I just think you can't really have those conversations and be taken very seriously anymore, because the highest office in the United States of the land has really landed pretty clearly that this is a conversation that needs to be happening over a period of time. And we have to be very thoughtful about what we do in this particular context. So secondly, I think that the agency coordination, that is just something that the industry has been looking for a long time. And the idea that now there is this responsibility placed across a variety of different agencies here in the United States. We have one of the more complicated regimes and regulatory regimes around financial services, as everyone knows, are now going to be really strongly encouraged. I'm not going to say prescribed, but strongly encouraged to find some path forward where their roles are more defined. And so I do think the industry is going to understand now, where do we go for what and what makes sense here. Now, all that being said, I think the reason that it is proving to be so challenging to regulate this innovation in this space is because it doesn't fit cleanly into the buckets that we understand well, or pretend in some cases to understand well, right? What is a security is still a very hotly discussed topic in many circles, nerd circles, as I would call them, with all due respect to my colleagues and professors here, right? How do you figure that out? I think that we do need to be thinking innovatively about regulation. We do need to be thinking about how can we take advantage of the transparency of blockchain? How can we take advantage of the fact that it is shining light, Eastward, to your very acute points, on these people and communities who have been left out of our system? And we all recognize that is, again, a market failure, but also really a tragedy. So all these things, I think, are now becoming part of the conversation. And I credit crypto for that. I credit crypto for opening up lines of communication about our responsibility as a society to all members of our society, and to trying to find a path forward where we can work together. The hope is that will be globally coordinated, but I think what we're seeing is more realistically described as a bit of competition in terms of who is going to attract this growth engine to their jurisdiction and who is maybe a little bit too risk averse, perhaps, or not forward thinking enough, I would say, to put a good frame on that. To accept that this is a reality that's going to come for every jurisdiction in some fashion or another. And we really have to get all this right so we can make sure that we do it responsibly.
Okay, Sheila, thank you so much for ending that discussion. Eswar, thank you for leading that discussion so brilliantly. I want you to stay with us now because it's time to bring in our panel of journalists. And first of all, I'd like to cross to a journalist at the Business Times in Singapore. Please, can you introduce yourself and pose your first question?
Hi, hi everyone. My name is Kelly, and I'm from the Business Times in Singapore. Thanks very much for the very interesting discussion and very different viewpoints. My question for all the panelists is: do you see any, sort of regulatory arbitrage unfolding as crypto firms sort of hop from one jurisdiction to another, precisely because of the point you talked about, that there is no regulatory equivalence between different jurisdictions? And do you think that can be achieved and is important? Thank you.
Thanks very much. First of all, Eswar, do you want to take that question?
Yeah, I see a huge amount of possibility for regulatory arbitrage across states in the US because we don't have federal level regulation yet, while many states are trying to move forward. There is potential arbitrage, as Sheila pointed out, across agencies. And most importantly, because Bitcoin and other cryptocurrencies no borders, potential arbitrage across national jurisdictions. So I think you're going to have to take a much more comprehensive approach across states, across different agencies, across countries in order to provide a sort of regulatory clarity in order to manage risks and help this industry burgeon.
Okay, thank you very much, Eswar. Do you have a view as well on this, Sheila?
I really agree with what Eswar said. I think that this is, it's complicated. We don't know where it's going to wind up. And I do think that there are arbitrage opportunities right now. I don't love that, because I think that puts the wrong frame on things, right? I think this really, it needs to be a technology and innovation focused more on bringing more people into systems. That being said, I think that that's accurate.
Okay, thanks very much. Let's move on to the next question now from the Karabar National Economic Daily. Now, this is a journalist who's in Nepal. Please do introduce yourself and pose your question.
Hi, I'm Kuber Chalise from Nepal. I'm working with Karabar National Economic Daily, the first national economic daily newspaper of Nepal, the South Asian country in between China and India, to give you a pretty idea. Since we've been talking about crypto and all these things, there's been a little bit serious trend we have observed in Nepal's forex reserve. From the beginning of this current fiscal year, our fiscal year begins in July. July to, let's say, yesterday, there's been a dramatic decrease in the forex reserve, and a lot of investigation and other things came to a conclusion that there's been a lot of investment in cryptos and bitcoins and all these things from Nepal. But our situation, as we are a small economy in South Asia, we have very limited forex reserve, which is sufficient for our imports. We are basically the import-based country. So that is sufficient for 6 months and 21 days, something like that. But the trend of depleting the forex reserve shows that it's going to give us a very hard time very soon. Mm-hmm. So my question is that, is there any way the small economies like Nepal can get benefit out of cryptos and bitcoins by regulating? To remind you that India has recently in its budget said that it's going to bring the cryptos under its tax regime and going to tax the transactions. We are still waiting in Nepal how they will do it so that we can also replicate the thing. But I'm asking the panelists, the informed intellectuals, that is there any way that small economies like Nepal have a balanced way that our forex reserve couldn't deplete overnight like this, and we can get benefit out of this crypto thing?
Okay, Kavera, thank you very much. I'm going to put that question to Barry, because Barry, you were warning earlier about the dangers of this with potential capital flight. How can this be reined in, yet innovations exploited?
I haven't studied the Nepalese economy recently. I conjecture, however, that crypto is probably not at the root of the economy's current difficulties. Many emerging and developing economies around the world, as Eswar said earlier, are experiencing difficulties with high energy prices, rising interest rates, recessionary fears, and so forth. So I suspect those kind of problems are at the root of current turbulence and not crypto. Taxing crypto transactions is hard for the reasons we alluded to before. They can be booked or completed in a variety of different venues. So just to follow up on the previous question, I do think international coordination of taxes and regulations and so forth is important. And I think the Bank for International Settlements, the Basel Committee of Banking Supervisors, is probably the right venue for arranging that coordination.
Okay, Barry, thank you very much. Well, let me put that question that we had to Eswar. Eswar, what kind of controls could be brought in, do you think, and how seriously should this issue be looked at of potential capital flight via crypto? Because there is concern that it actually could undermine the stability of economies.
Now, certainly, we've seen examples of that. I mean, we saw the positive example of cryptocurrencies being used to send donations to Ukraine, although there are probably other ways to do it. It just turned out to be a cool and effective way of doing it in the short term. But for many countries that are facing capital outflow pressures and depreciating currencies, this has become a real problem. We saw this when Iran was beset with sanctions a few years ago, when the Turkish lira was collapsing, and now in Russia, when the ruble took a big hit, that you can in fact have domestic residents who find that it is better to use cryptos rather than investing in domestic currency denominated deposits, and potentially even using cryptocurrencies as means of capital flight. So I think there is a risk here that while cryptocurrencies might benefit an economy in a wartime situation simply because other payment systems are not working very well, there is also a risk that an economy could find its financial system being undermined by cryptocurrencies because they provide an avenue for capital flight. So I think we need to be a little cautious about all the benefits of crypto and how they could turn into some real risks.
Okay, thanks very much, Eswar. Well, let me move on to the next question, which is coming from Nigeria, from Business AM. Hello, could you explain who you are and pose your question, please?
All right. Hi, everyone. My name is Charles Abode, and I write for Business AM here in Nigeria. Now, I want to ask this question. You know, it's a very interesting topic we are actually talking about. Now, taking the case of Nigeria, last year, the Central Bank of Nigeria launched its digital currency, which is the Central Bank Nigerian Digital Naira, you know, and which is the e-Naira. And it has been a lot of adoptions, you know, the banks, you know, migrating into it and others. Now, but in the case of crypto, when the Securities and Exchange Commission decided to adopt crypto as an asset class, you know, trying to study it and see how it can be, you know, traded upon by both local and international investors, the central bank came up February last year and prohibited the local banks from engaging or facilitating any trade on cryptocurrency. And that has raised a lot of questions that the monetary authority do not want to support, you know, the growth of crypto in Nigeria. And looking at the statistics, Nigeria is among the top 5 countries where crypto is traded around the world. But now, last week, some banks actually were engaged in, you know, holding accounts, you know, used for trading crypto, and they were slammed by the bank. You know, they were fined actually. Now, I want to ask, in what way or what measures should we adopt, you know, to drive the acceptance of this, you know, this digital assets by central banks around the world, and then say perhaps looking at Africa mostly also, but let's say some markets or emerging markets around the world. How do we drive for the acceptance of this
Thanks
currency?
very much, Charles. That's a really great question. So let me put that to Sheila. So how do you really exploit the benefits of this? As Charles is pointing out, central bank digital currency being adopted, of course, the African continent, a real innovator in terms of digital payments we saw with use of mobile phone technology. So how can a blockchain and central bank digital currencies be best exploited?
Well, those are very different things. I think we should first acknowledge that not all central bank digital currencies will run on a blockchain necessarily. There'll be some that do and some that don't, and that is going to be a design choice. And I think the question was a bit about crypto as well and how crypto can play a role on the continent. And I think we're already seeing quite a bit of pickup and traction on this, in part because, as you noted, Suzanne, this is a mobile ready, you know, kind of environment. There's a lot of cultural acceptance of that form of kind of engaging in payment. You know, M-Pesa and the history of that are all well known and documented. So I think there's a tremendous role to play. I think we've already seen a lot of creation of African capital markets via currency pairs and trading pairs that either trade through Bitcoin or some form of crypto. I think that's been really powerful in order to help kind of exchanges across borders. I think we're actually seeing intracontinent remittance flows. Actually, we tend to think of remittance flows as being from from very wealthy countries to poor countries. There's actually a lot of those flows that happen across borders between countries that are proximate to each other. And we're seeing quite a bit of that happening in Africa, using, again, crypto as an intermediary or as a direct form of exchange. So in terms of what one can do in terms of a central bank, I think it's creating a broader understanding that there is a universe of digital currencies here that have different applications and use cases. A CBDC, one that runs on a blockchain or not, is going to have a different path forward because of the need for tighter controls from the bank and for many other reasons than a stable coin or than crypto, pure crypto, if you'll call it that. And creating an environment in which innovation around all of those things can be exploited, to use your word, or certainly encouraged, I think is going to prove to be quite important to the development of these kinds of markets on the continent.
Okay, thank you. Very briefly, let me ask the same question to Barry. What do you think about the potential, really, for crypto on the African continent in particular?
I think that the potential is there, but we have to bear in mind, number one, that in reality, not everybody has a smartphone. A crypto wallet won't run on a plain vanilla mobile phone. It has to run on a smartphone. And you're going to have 3G or 4G coverage in order to use it. So some African central banks, I think the Central Bank of Ghana is actually the leader here, are exploring offline modalities where people can use a phone or a smart card, the equivalent of a debit card, offline. And then when you're online again, the system will update. But exploring is very different from implementing. So I think tales of financial inclusion, which we all like to tell, assume possession of technology and access to a network that is still far from universal.
Okay, thank you so much to Barry, to Sheila, to Aswan, to all of the journalists who posed the questions. I really appreciate it. Now, just before we go, we have time for one more treat. Let's hear from Jeremy Allaire, CEO of Circle, beginning with the impact of stimulus on the crypto world.
It's a very fast-moving situation.
A dramatic increase in coronavirus cases.
The fastest correction the stock market has ever seen.
Alongside the pandemic and the economic shock that came from the pandemic was a level of fiscal and monetary intervention in the economy that's totally unprecedented in modern times.
It's a prescription for relief that could top $1 trillion.
Americans need cash now, and the president wants to get cash now. And I mean now, in the next 2 weeks.
All around the world, individuals and entities started to have concerns about inflation, the inflation of fiat currencies, concerns about the fiscal health of their own domestic governments, their own domestic monetary environments. And that has created a global bid on non-government scarce digital commodity money. And so there's this kind of shift in terms of how people think of their money in the context of mass government fiscal deficit spending and continued literal money printing by central banks.
The Christie's auction for digital artist Beeple coming to a close a few moments ago. The final bid, $69 million.
Oh my God.
The overall crypto economy continues to grow. The number of projects, companies, organizations that are building in the crypto economy is extraordinary right now. And it's in every country in the world, really. You're seeing not just startups, but you're now seeing major established firms that are connecting into this. And you're right at that point where the technology is becoming useful enough and is something that can be widely available enough that you can, quote unquote, cross the chasm. And it's a chasm because it's a huge leap. And once you get to the other side of that leap, it tends to be an exponential growth curve for a period of time. With any major new disruptive market and new disruptive technology, there are going to be a lot of people chasing ideas that don't go anywhere. There's huge amounts of intellectual property development and innovation, but I don't think people should just assume because it has something to do with crypto or it has something to do with, blockchain or digital assets that it's therefore going to be successful. But we should look at that like we've seen with other big tech adoption cycles. You're going to have some very large winners, a lot of people who make positive change with it, and then a lot of projects that just aren't that very successful. Blockchains provide a kind of economic coordination infrastructure layer for the internet. In that environment, you're going to need stable value currencies that people use widely for everything from, the proverbial purchasing a cup of coffee to more involved transactions, lending transactions, investment transactions. So the demand for stable value currencies is very, very high. And the dollar remains the preferred transactional medium in the world economy today. And so naturally, a dollar digital currency that is kind of built entirely on that new economic coordination infrastructure makes a lot of sense to people. Digital currency, digital assets, even things like Bitcoin, et cetera, are now very much part of the geoeconomic, geopolitical discussion in a way that would have been unfathomable to people even just a couple of years ago.
Jeremy Allaire. Well, that's all we have time for today. Thank you so much to all our contributors for making this such a fantastic event. But most of all, thank you to you, the audience, for watching. It really wouldn't have been anything without you. I'm Susanna Streeter, and this has been Finance 3.0, brought to you by Project Syndicate. Goodbye.